Hello, this is the Chart Profit video, Friday 2nd of December, an hour and a half into the trading day. This is from the pre-open today. Said pre-open Tuesday that the first minor sign of weakness would be a value area generated below 2200. I'm talking about the E-mini S&P that you're looking at here. So we have a minor, it's actually a 5-6 week point of control at this level here at 2200. First sign of weakness, a value area printed below that level which we saw. I also marked aggressive selling, that's the red at the bottom there. This is just a minor indication of weakness. In the longer term, as we know, as long as the E-mini prints above 2159.50, it's in a long-term strong price location, and the last 12 value areas have been printed above that level. This is just a minor indication of weakness, but we have got a value area below that minor point of control and aggressive selling. We'll also come on to this in the sentiment. My version of the RIDEX assets ratio was up at 8.17 yesterday. That's the highest ratio for 11 months. So let's look at the pulse chart for the New York chart. Just very quickly, these breadth indicators, these bottom two indicators are in strong enough positions to maintain this green area here, which is the breadth indication on the pulse chart. So breadth at the moment is strong. Price momentum, although it's positive above zero, which is trend up, has actually just ticked lower last couple of days. That's the first sign that you'll see when the market's losing momentum. You just see that indicator tick off, and of course we have the aggressive selling at the top here, indicated by the red bar there. So some minor, very minor at the moment. If you're an investor, they're minor indications of weakness. But in the short term, I'd prefer to see the E-mini back above 2200. Preferably see some green, some buying marks on the profile above that level. So that's why I said today, up here, new longs are eliminated for me, at least until significant buying green is marked again. So here's that RIDEX assets ratio. It spiked up here quite considerably yesterday to an 11-month high. Main reason for that actually was a reduction in the bear fund assets that I follow. So yesterday that hit the lowest level since August 2015. There's quite a reduction in bear fund assets, and that lifted the ratio. Let's quickly run through a couple of the sentiment indicators. This is the public poll from AAII. Bulls percent was lower at 43.8%. That was down from the previous week's 49.9%, which was the highest bulls percentage since January 2015. So previous week, not this week, there were quite a lot of bulls in the poll, the highest number since January 2015. We said at the time that was an indication that things might be getting a little overheated. If you look at the net, the bulls minus the bears, that's at 18.7. That's actually down this week from 27.8 previous week, and that was the highest since February 2015. So recently there have been some indications of a little over enthusiasm. If we look at the 4-week moving average of the net, that black line there, see also that that's exceeded the highest reading. It runs all the way back to early 2015 again. I said actually that without the RIDEX kind of confirming, shouldn't put this too much in focus, but as we've seen, the RIDEX has actually now spiked higher, so we can say sentiment is getting a little bit overheated right now. Here's the investors' intelligence data. Simply the bulls percent was higher at 56.3, bears percent was also higher at 22.3. Nothing too clear in this data. Here I'm looking at the Lipper US fund flows. They recorded outflows, minor outflows this week, net 961 million. But the 4-week flow number that I follow in black, just a 4-week summation of the flows, that has reached 23.36 actually billion, which is the highest since March 2015, back over here. So again, you can see that on this rally from the recent low, I've seen quite an increase in bullish sentiment here in the public poll and now in the RIDEX. As I said last week, some of the major charts that are broken out, like the Russell 2000, very difficult to find levels to key from, so we look elsewhere. For instance, on the Russell 2000, broke out to a new high, had an incredible rally, just selling off a little bit here, but no local levels to kind of key from. Same thing with the Spider. If we look here, for instance, on the Qs, the 1 year at 117.25, we are now printing below that level in a weaker price location. So there's an indication of weakness here in the Qs, and the same thing XLK in the technology sector, the 1 year at 47. That's the 1 year point of control, and we are now printing below that level. Big down day yesterday. This is the UK's FTSE 100 index. We've been talking about this band here of controlling prices, the 6 month up here and the 7 year here, and the FTSE unable to print much time above, which would have been a bullish indication. In fact, it's come off a bit. We're back a little bit today, but still in a weak price location down here below that band of what is now resistance. The DAX also, as we know, this 3 year value area high up here was just resistance to the 3 probes that we saw, but this is the major level, the half range at 10.545. We printed some time above that, if you remember. We talked about it last week, but just at the end of this week we've capitulated a little bit and now printing below that level. So I want to see the DAX back above that major half range. So I can see I've just shown 3 or 4 charts at least there which have moved into weaker price locations, possibly in anticipation of the risk event over the weekend. Just some money coming off the table, just to see how that develops next week. Okay, we're looking at T-bonds here. This is the T-bond ETF, TLT. Just a review, as we know from the top here, we built that 4 month at that point, rally back to it and then decline off there, off that resistance, down, a little stall at the 3 year down here, and then the waterfall down to this week where we hit a new low for this move. And as I've been saying all along, the major is at 117.15. I haven't quite reached that, but I did say that these major points of control can often act like a magnet. So when we're in here, it's very difficult to look at the buy side. We called it a falling knife, but something, no real key level to usefully use, but you have come within striking distance of that major support. One thing I can say with a degree of confidence is price below that level down here would be extremely weak price location. I'd be really concerned if that happened. I'm hoping that bonds can find a base here. USO, the oil fund ETF, now back in a much stronger price location above this level here. A little bit of resistance on the way up here. We saw chart subsequently find support here at the halfway point, and now we're back above that major, which is at 1078. So as long as this chart holds 1078 above that level, as long as this major doesn't move, we're in a strong price location for oil here. We saw GLD, the gold ETF. If you remember up here, it was the 3 year value area high. A couple of probes above that level, got the major point of control at 119.84. We broke below that. We've actually, for this distribution going back about 4 years, the value area low comes in at 111.21. We've just tested that. Let me just actually show you that on the distribution chart. So here we are, 111.21. That's the bottom of this blue value area here. We've just probed that. Interestingly, what could happen, as we know, the point of control associated with this distribution is here, but we could easily see that shift lower to maybe here. So a little rally and some time could shift that point of control lower, down maybe around 115 or just under. And then if we saw that, and if GLD was able to print some time above that new point of control, that would put gold in a much better kind of situation than it's been in for a few months. There you can see the probes above the value area high, and we've had one here. So just to reiterate, this is a kind of common pattern. You see the point of control shift lower, hopefully to what I call like a logical place, and then that would turn me bullish if that happened. If we saw the point of control shift down to about 115, and then we printed some time above that level over here, 115, that would be an interesting situation to consider new longs. Currently, obviously that hasn't happened. I'm still very cautious on the chart. Dollar index has been very overbought, as we know. It's off a little bit this week. Looking here at the British pound against the dollar, probing up towards 127 currently, which is the highest level since early October. And the euro coming off its lows a little bit against the dollar, still in a very weak price location. Just a quick look again at the E-mini S&P and the important levels here: 2159.50, the point of control, and the minor at 2200. Just a little bit negative, the fact that we're printing below that level, so price back above 2200 would be a positive for the E-mini. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.